This is Alan Bush with the Daily Financial Forecast for October 8th. Over in the stock index futures, we are seeing some pressure in the overnight trade. This basically due to Chinese equity markets actually opening higher but not as strong as some analysts had anticipated. Since then, though, we have seen a bit of a recovery in the indices. We do feel that the overall economy is relatively stagnant, and that also applies to the global economy, which will prompt central banks around the world to add more stimulus, especially the ECB and the Bank of Japan. Also, it does look like the Fed and the Bank of England will be very slow to raise interest rates, so that should remain supportive longer term to stock index futures. Now, moving over to the foreign currencies, we are seeing some short covering coming into the dollar index. Over the last week or so, the dollar index has performed rather poorly. So a little short covering today. Looks like on very limited volume, and I would not be surprised to see a move back down to lower on the day for the dollar index. Longer term, still looks like the greenback can come under some downside pressure from an interest rate differential point of view, as in our opinion, the Fed will be very slow to raise interest rates. Also, we are seeing the euro currency trading basically steady, even though we did have German export numbers coming in at their weakest levels since 2009, and the pound lower, even though UK housing numbers coming in a little bit better than expected. Moving over to the interest rate futures markets, we did see some gains at the long end of the curve, especially in the 30-year bonds. This due to pressure in the stock index futures in the overnight trade. However, with stock indices starting to recover, some of the gains in the 30-year bonds given back. In fact, we're now back to unchanged on the day at the long end of the curve in the 30-year treasuries. Longer term, though, we do feel that the 10 and 30-year issues will probably continue to advance, especially the 30-year issues, as more stimulus is likely from central banks around the world, and as the Fed and the Bank of England are slow to raise interest rates. So the long end of the curve should be the leader to the upside, and I think this is a trend that should last probably at least through the end of this year. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.